What if I told you there's a commodity that's quietly been setting up for a huge bull market and hardly anyone's talking about it? This might be the most overlooked investment opportunity of the decade. In today's video, we're diving into the bullish case for investing in uranium. Whether you're an investor chasing asymmetric returns or just curious about the energy sector's next big thing, this video is going to give you a full breakdown, complete with data, trends, and what the pros are doing right now. Stick around, because what's coming might surprise you. Let's start with the basics. Why uranium? Uranium is the fuel used to power nuclear reactors. These reactors produce clean, reliable, and baseload energy. Unlike solar or wind, nuclear power doesn't depend on weather. And in a world increasingly focused on decarbonization, that reliability is crucial. But here's the kicker. We're heading into a massive supply-demand imbalance. Right now, there are over 440 nuclear reactors operating across 30 countries. On top of that, over 60 new reactors are under construction, with hundreds more proposed or in planning stages. Countries like China, India, and even the UAE are pouring billions into nuclear expansion. Even developed nations are making a comeback. The US just extended the lifespan of several reactors. France reversed course and is doubling down on nuclear. Japan, after Fukushima, is gradually restarting reactors. Why? Because governments now realize if we want net zero emissions, we can't get there without nuclear. Nuclear energy currently makes up 10% of global electricity, but that percentage is expected to grow significantly in the coming decades. And more nuclear plants equals more demand for uranium. Now let's flip the coin. While demand is increasing, supply is struggling to keep up. After the Fukushima disaster in 2011, uranium prices tanked, dropping from over $70 per pound to under $20. This forced major producers like Cameco and Kazatomprom to slash production or mothball mines entirely. Exploration for new mines? Basically frozen. Fast forward to today, uranium prices have rebounded past $80 per pound, but many mines remain offline. New mine development can take 10 to 15 years, with huge upfront costs, environmental scrutiny, and political risks. This creates what investors call a structural deficit. Demand keeps rising, but supply can't catch up fast enough. And that's where the opportunity lies. Here's something most retail investors don't know. The uranium market is not like gold or oil. There's a small spot market, and the majority of uranium is traded through long-term contracts. That means prices are often sticky until they're not. Enter players like Sprott Physical Uranium Trust, SPUT, which started buying physical uranium off the spot market and storing it. They're not selling. They're holding, effectively removing supply from circulation. Other funds and companies followed suit. This put major pressure on utilities, which now face rising prices as they scramble to secure long-term contracts before it's too late. Nuclear has long been controversial, but that narrative is changing fast. ESG investors, once skeptical, now see uranium as a climate solution. Nuclear energy produces zero carbon emissions during operation. With the EU officially labeling nuclear as green energy, institutional money is finally starting to pour in. This shift in perception is critical. It paves the way for government funding, investor confidence, and long-term stability. But wait, if this is such a no-brainer, why isn't everyone investing? Two reasons: volatility and misunderstanding. Uranium is a tiny market. It can be wildly volatile, driven by headlines, politics, or sentiment shifts. One announcement can swing the price double digits. Plus, many people still associate nuclear energy with disasters like Chernobyl or Fukushima. Fear and misinformation still weigh heavily on public perception. This means uranium investing isn't just about numbers, it's about conviction. You need to understand the macro picture to stay the course. Now here's the big moment. The perfect storm is brewing. Demand is rising, supply is lagging, governments are supporting nuclear, financial institutions are stepping in, and uranium is still trading far below its inflation-adjusted highs. This is exactly the kind of asymmetric bet savvy investors look for. Think of it this way. If uranium doesn't take off, you might break even. But if it does, we could see a multi-year bull market with 5x, 10x, even 20x gains in select equities, not unlike the lithium run or early days of oil booms. History doesn't repeat, but it often rhymes. And the last time uranium had a bull cycle, it ran from $10 to over $130 in just a few years. What do you think? Do you own uranium? Comment below.